All right. So pretty flat on the day, which is kind of what I expected. A lot of realized vol crush, not a lot of price movement. We tested the high and the low of the intraday range and closed kind of right in the middle. Not particularly exciting, but not overly bullish or anything. ES failed the upside breakout. We filled the downside gap. This is starting to look a little bit like a breakdown, although I'd be more confident if we fall below the 6,000 level, 6,005 or so, but fairly near Friday's close, day over day. Commodities got hit pretty hard today. Drop in oil, the OPEC announcement, and precious metals falling against the rising dollar. Looks like commodities down pretty big across the board, and some of that may be due to continued weakness in China. Yields grinding down most of the day, but turning up a little bit into close. Dollar up 50 points across the entirety of the day, and still struggling to break out above resistance here. Although it looks like it's going to, and we're probably going to see yields continue to climb on the back end of the curve. We did get a little pump there into the end of the day, but not back at their peak prior to last week's FOMC meeting. So they haven't fully recovered off of JPA's overt and meaningless dovishness, but they're very likely to. Core. Looks like correlations continuing to push down. We're still seeing vol shorting. I think end of day, VIX did pair back under $15. VX now at like 15,485, and 3 month VIX at 1677. So still seeing vol shorts come in. Obviously, dispersion still picking up, but not at the same pace it did right after the election, obviously. And we are reaching a range on correlation where we tend to stagnate. This is kind of where the dispersion trade has been capping out over the last couple of quarters. And it hasn't been since really like July that we've seen it go much lower. So we'll see if that's meaningful over the next couple of days. Leverage in the carry trade slightly up from this morning, but even though the dollar rose, yields didn't very much, and so we didn't see leverage move up all that significantly. Although leverage at the shorter ends of the trade did move up a bit harder. Forward yield on volatility still just a bit negative at 3.11%, but not falling deeply negative yet. Move under 100, not very interesting. Looks like skew is kind of doing nothing. Some of those tail risk hedges are still being held, which is kind of interesting. You'd think we'd see those dropping off in this price range and not hanging out. 63.61% of the S&P above its 20-day moving average. That's not right. Anyway, vol's basically back at our low from September. I don't have the correlation thing up, so I'll have to look at that later. Fed fund futures have moved rate cuts down to 0.43 over from now to June of 2025. So actually quite a significant reduction between Friday and today. The expected path of monetary policy. As that slows down, that will become more and more bearish for the breadth that has been holding this market up. And the spread between the 10 and 2 falling quite a lot, and almost, Jesus, yeah, the yield curve almost fully reinverted, with the spread moving from positive 13% down to 0.4% today. That's fairly significant. So we're starting to see the yield curve get very, very close to reinversion. We got the 2-year at 4.292 and the 10-year at 4.355. So that's kind of nuts. Although a reinversion of the yield curve would probably be bullish in the short term. Well, it's the Fed's cutting, but inflation expectations are rising. On the technical side of things, we did get a new higher high today, but not substantially higher. And we did end up closing a little lower than Friday's high. So we might be seeing this start to turn around a little bit, but may still have some room to go. I think that's about it. Sector wise, tech underperforming today. Finance still propping things up. Looks like tech services were doing okay. Consumer durables did well, but mostly because of Tesla. It looks like consumer and commercial services did okay, and so did health services. So a lot more bullishness in the service side of things than on the manufacturing or retail side. Anyway, that's about it. I'll have Pickles picks out tonight, and I'll see you guys tomorrow morning. Later.